Hello and good morning to everyone. I can't actually believe that we are now at the end of 2021. So this is actually our last business webinar for the year. And of course, we're going to be restarting them again in 2022, probably around February or possibly March. So please look out on our website at the beginning of the year to have a look and see under the events page the announcements of our future webinars for business owners or business information sessions that we have planned for next year. So a very warm welcome to all the business owners joining us today, our very last, as I said, webinar. And I think this is a very pertinent topic for smaller businesses because many are struggling financially and have been over the past few years. And of course, the COVID lockdowns have only exacerbated the situation. Now, as you can also imagine, the fiscus, of course, is battling to meet its budgets and quite frankly, could not care about small businesses' woes. They just want their taxes. And if they can't get or meet their budgets through normal means, they're going to start focusing on the pennies and not the pounds. So with this pressure mounting on SARS to make up the fiscus shortfall, it's become more assertive with its collection stratagems. And of course, payroll audits have become an obvious target of choice. So this is a huge blow to smaller businesses who are still trying to keep their head above water, especially in this economic winter. So your best defense, guys, is really to ensure that your company's payroll is fully tax compliant. So an internal payroll diagnostic. An internal payroll diagnostic means that you do it yourselves or audit on your own company's payroll. It's going to be imperative to ensure compliance and to mitigate this risk. So our presenter today is Paula Fonseca. She's our very first, this is her first business webinar. Paula has been a band franchise owner for more than 8 years now. She's based in Durbanville in Cape Town. Paula obtained her Bachelor of her BCom degree back in 1989 and is a member of SAPA, which is the South African Institute of Professional Accountants. Now, just before we get started, as Shane mentioned earlier, Paula and I would love to hear from you and your questions. We will only be using first names. So if you have any questions during the presentation, please type them into your chat box in your control panel on the right of your screen, as Shane showed you earlier, for our question and answer session after this webinar. We would absolutely love to hear from you. Okay, so let's get into it. We'll cross over now to Paula. Hi, Paula.
Hi, Monique. Thank you for the introduction. A warm welcome to everyone. Today's presentation is summarized as follows. SARS tax revenue budget for current fiscal year. What are the triggers to PAYE verification or audits? The main reasons why PAYE audits result in liabilities are PAYE not being fully understood, lack of appropriate controls, fringe benefits not being accounted for, reimbursement or allowance, what is the difference, home study, COVID-19 has placed this allowance on the spotlight, RP5 biannual reconciliation and preparation, scope of audits, some recommendations, and lastly, some questions. SARS tax revenue budget. This is as per the current 2021-2022 tax year. The budgeted gross tax revenue for the current fiscal year is 1.5 trillion, of which personal income tax makes up 38% of total revenue. The vast majority of personal income tax is collected through the pay-as-you-earn system. PAYE is a withholding tax, which means employer is ultimately responsible for ensuring the correct amount of tax is deducted and paid over to the receiver of revenue. Risks associated with non-compliance are often underestimated. Very easy to make a simple error that could result in costly penalties and interest. What are the triggers or red flags? The two main reasons why employer is selected are financial discrepancies, the EMP 501, which is your RP5 reconciliation, not matching to the EMP 201, which is the monthly PAYE, UIF or STL return. EMP 501 has to be filed every 6 months. The individual RP5 is also now checked upon submission to ensure that the correct PAYE was deducted from gross remuneration. IT14, which is your annual income tax return, differences between the payroll reconciliation and the cost of employment in the annual financial statements will trigger a verification. Differences must be reconciled and reasons for discrepancies must be correctly and clearly explained. Random selection. The organization does have the right to request reasons why they have been selected for the payroll audit. Please note that employers' risk profiles may change from 1 year to the next year. This is because SARS systems use comparisons and latest assessments. Sudden changes on your employer return may result in so-called triggers or red flags, and dispute resolution can be very costly. Temp or so-called casual labor, as well as foreign workers without work visas, place some industries in a more vulnerable position. Some of these industries are carpet cleaners, garden services, hospitality industry, and farm labor. TERS UIF payments were rejected for some employees due to work visas either having expired or not even being active. Main reasons for liabilities after PAYE audit. PAYE not being fully understood. Often employers rely on unskilled payroll staff. Over-reliance on payroll software, incorrect capturing and or incorrect classification of income or deductions will not be picked up by any software. Under recovery of PAYE is payable by employer and not always recoverable from the employee. Also, PAYE is calculated on gross remuneration, and considering that the maximum marginal tax rate is 45% for employees, can make this under recovery a potential huge cost for the employer. Employer responsibility cannot be waived, and difficult to prove that error was not due to any negligence. Lack of appropriate controls. Do anticipate IT14 SD, which is your supplementary declaration, when setting up payroll to ledger integration journals. Some costs may be incurred, which will result in additional PAYE, example fringe benefits. Please check with your accountant if all fringe benefits are included in the payroll system. 7th schedule of the Income Tax Act defines fringe benefits. A good control would be separating functions, one employee doing cash book payments and another doing payroll function. Major risk is payments to employees outside of the payroll system. How is this reconciled and how often is it reconciled? Is payroll administrator in the loop? Ghost employees. All payments via the cash book to employees must be reconciled to the payroll system. All changes, such as special allowance, increases, ad hoc bonus, etc., must be formalized in writing to the employee. Forms must be signed by employer and employee for the respective period. The employer is the director or prescribed officer for payroll. Banned as payroll forms for all the payroll changes. Please do ask your franchisee, if you are a banned client, for copies. PAYE is then payable in the same month that the employee receives the benefit. Some examples are gifts, awards, or subsistence allowances. Please also ask your accountant about VAT implications. Lastly, employment contracts must comply with current labour and income tax regulations. Do still see some contracts mentioning net salary. That is illogical, as statutory laws may change at any time. Fringe benefits not being accounted for. The more common mistakes we find are acquisition of an asset at less than the actual or market value, not being included as a fringe benefit. Examples are vehicles, laptop, or even installing security alarm or camera at employees' own premises. Any contribution by the employee will reduce the fringe benefit taxable value. Right of use of a motor vehicle for private use. This value is determined monthly and is based on a formula. The determined market value is the acquisition cost, which includes VAT, multiplied by 3.5% to determine the monthly value. So, for example, if acquisition cost is 250,000 times 3.5%, that gives you 8,750, and that is the monthly value of the fringe benefit. 3.5% per month of the vehicle's determined value will be reduced to 3.25% if there's a maintenance plan. Output VAT on the fringe benefit value is then payable to SARS. Medical or pension or retirement funds paid by the employer are fringe benefits. Do get proof of payment when employee pays and wants the tax rebate monthly. Retirement annuity or medical. Otherwise, employee must get credit at year end when they get assessed. Free or cheap services. This must be mainly for business purposes. Examples are internet or mobile. Any reimbursement for private expenditure is a fringe benefit. Low interest or interest-free debt. The amount that's subject to employees' tax is determined by calculating the interest at the official rate for the applicable portion of the year, reduced by the amount of interest, if any, actually paid or payable by the employee for the portion in question. The official interest rate means a rate of interest that is equal to the country's repurchase rate plus 100 basis points. For example, if the country's repurchase rate is 7%, the official interest rate will be 8%, 7% plus 100 basis points. Casual or irregular loans up to 3,000 Rand are not taxable. Pool cars are not a fringe benefit. However, there is a precise definition of what is a pool car. The vehicle must be available to and used by other employees of the employer in general, and the private use of the vehicle by the employee is infrequent or is merely incidental to the business use. And the vehicle is not normally kept at or near the residence of the employee concerned when not in use outside business hours. For second scenario, the nature of the employee's duties are such that he or she is regularly required to use that vehicle for the performance of such duties outside normal hours of work and is not permitted to use such vehicle for private purposes other than traveling between place of residence and place of work, or private use which is infrequent or is merely incidental to its business use. Please do always keep evidence documents in mind. what documentation to keep so that the pool car definition may be easily established. PAYE risk, reimbursement, advance or allowance. There sometimes is some confusion around this, and reimbursement is based on actual invoices or receipts. Easy to provide proof and claim to be signed by the employer. Allowances or advances are included in taxable income. Travel, subsistence, or cell phone allowance are some examples. It's normally a fixed amount, so the business portion still needs to be assessed by SARS. If the allowance is advanced, how to update payslip and ensure that salary control account is journalized correctly to easily identify any out of the ordinary payments. SARS payroll audits could include all payments being checked, and employee advances would be easily picked up. Excluded from allowance are actual business kilometers paid at current prescribed maximum rate, R3.82. This is March 2021 to February 22. Still do included in the payslip, but only taxable if rate is over R3.82 per kilometer. Payroll software should be tested as easy to use the incorrect code, which will pull through incorrectly to the RP5. This could result in employee being incorrectly assessed. If employee receives a travel allowance, no other vehicle-related expenses may be reimbursed. There is an exclusion for toll fees and parking. Directors are employees in this case. Home office study allowance. Due to COVID-19 restrictions, lots of employees are still working from home. Section 23B of the Income Tax Act states that the tax deduction for home office expenses is only allowed if the room is regularly and exclusively used for the purposes of the taxpayer's trade, example, employment, and is specifically equipped for that purpose. The home office must be set up solely for the purpose of working. This means no other equipment or other person using it for any other purpose. The tax deduction is calculated for the area of the home utilized for trade, in other words, employment purposes. Home office expenses relating to the premises are calculated on a pro rata basis, which is the square meters of the area of the home office versus total square meters of your home. If the employee's remuneration is only salary, the duties are mainly performed in this part of the home. It therefore means you perform more than 50% of your duties in your home office. How would the employee provide proof? Because SARS would definitely ask for some proof. To provide proof of 50%, employer may supply contracted addendum specifying the days that employee must work from the home office. But please note, this does not release obligation from employee to substantiate that they actually did work from specified work area in those days. The third option, where more than 50% of your remuneration consists of commission or variable payments based on your work performance, and more than 50% of those duties are performed outside of an office provided by your employer, this last option is the most likely to be accepted by SARS. Impact of home study on primary residence exclusion. If employee is renting, then this does not apply. If a primary residence has been used by a taxpayer, partially for purposes of carrying on a trade, such as in the case of a taxpayer that makes use of a home office, then the primary residence exclusion of 2 million must be apportioned for the non-residential use. And the 2 million proceeds rule for disregarding any capital gain does not apply to the part of the premises used for purposes of trade. The apportionment will be based on the proportion of the floor area used for business and private use, and must be applied to the total capital gain to arrive at the private portion of the capital gain and the business portion of the capital gain. For the reasons above, reimbursement of actual business expenses based on verifiable invoices, for example, cell phone costs, Wi-Fi, or other business expenses, is the best way to reimburse the employee and not the home office allowance. IRP5 biannual reconciliation. You may use EasyFile or e-filing, but EasyFile has improved functionality and e-filing is sufficient for a small amount of employees or for a once-off submission. Biannual reconciliations. This is for period ending August and February. EMP 501 deadlines are then normally end of October and May. EMP 201 should be corrected prior to filing EMP 501. Otherwise, risk assessments could be triggered, even if the discrepancy is as small as 60 Rand. Do check status after filing EMP 501. Are there any verifications requests? An employer who willfully or negligently fails to submit an EMP 201 or EMP 501 to SARS is guilty of an offence and is liable upon conviction to either imprisonment for up to 2 years or both imprisonment and a fine. ETI, which is your employment tax incentive rebate, will be disallowed if you're not tax compliant. Scope of audit. It's important to establish what is the scope. Does SARS want to verify that all income and expenses have been taxed correctly? Are all allowances included in RP5? Have all fringe benefits been applied correctly in the payroll, and thus was the correct amount of tax calculated on these fringe benefits? Examples: medical, pension, loan debt, motor vehicles, or other allowances. Are the correct RP5 codes being used as set out in the business requirements specification? This document can be found on the SARS website. SARS is bound to release an update of the status of the audit every 90 days after the commencement of the payroll audit. The definition of relevant material that SARS requests is exceptionally wide, as it often includes material that is deemed foreseeably relevant by SARS. Yet, a taxpayer has the right to request reasons why SARS believes the information is relevant to the scope of the audit, or why it will be foreseeably relevant in the future. SARS cannot request material that is already in its possession. Yet, it is common for SARS to request information that's easier to obtain from the taxpayer than searching for it on its systems. SARS cannot go on a fishing expedition and issue a payroll questionnaire that covers a different tax period than the one being currently selected for audit. SARS must request very specific material that relates to the scope of the audit. Scope of audit, if it's not just a simple verification, but a proper audit, you'll still get the request for material to be uploaded within 21 days. There could be a field audit, it's not as common, or a desk audit, which is the preferred format. A progress report should be issued every 90 days. Audit outcome, 21 business days after conclusion, and objections may be lodged within 30 business days. The whole process is quite complex, so do ask your accountant for assistance if you get selected. Some recommendations. Payroll system cannot do the thinking for you. Do hire qualified people. Letters of employment to include all benefits. Update whenever necessary. Do ask your accountant for a monthly checklist. Check variances. Reimbursements, travel, and allowances paid via the payroll. What is the difference between temp contract workers versus independent contractors? There's a dominant impression test which is available on a SARS website that guides the assessment whether someone is indeed an independent contractor. If the test shows that there's a possibility that the contractor is not independent and could be therefore a deemed employee, 25% PAYE must be deducted from contractor. There is tax insurance. You may contact tax risk underwriting managers for more information. Independent checks by external accountant, payroll health check are very important. The payroll health check diagnostic questionnaire, you may inquire from BAN for a copy. BAN contact details are below, 0861 226 226, or email info@ban.co.za. Lastly, SARS versus the taxpayer. The winner will be the party who is best prepared, who has the best defensive system, who has the best ammunition and weapons, and who has the most resolve to defend its position.
Are regular loans, this is from Jane, are regular loans aggregated as 3,000 Rand over a full 12-month period? Thanks, Jane, for the question.
No, they are not, but it is important that it must be irregular. In other words, if you give someone a 3,000 Rand loan every single month, that is definitely not irregular. So you could have loans of 3,000 Rand for 2-3 times a year, but it can't be on a regular basis.
Okay, and also I think the question is from Jane is that are they aggregated? So you might give, I assume from the question from Jane is that perhaps 1 month you might give the employee 2,000 Rand. They might owe 1,000 Rand on that loan, and then another loan is advanced, maybe 2 months subsequent to the first loan of maybe another 2,000. And so is that aggregated, I would think. And yeah, Jane, I would think that, you know, if a loan is being in any 12-month period, there's a loan and then some payment and another loan and some payment, you're going to probably find that that is definitely a fringe benefit and there's going to be interest charged on that. So it should be charged. So if the employee is not being charged interest at the official interest rates, which is the SARS interest rate, not the bank's interest rate, okay? If that employee is not being charged that interest on those loans, then that interest portion that's not being charged at the official interest rate becomes the fringe benefit value, and that gets added to the remuneration and taxed. So the question is that employee actually being charged interest by the company? And is that interest being charged at the official rate or less than the official rate? So yes, even if it is a loan and it does happen frequently over a period of 12 months, SARS is definitely going to see this as a fringe benefit. Okay, next question from Lloyd. Thank you for the information presentation. My question is as follows. When SARS asks for supporting documents for the M501, what exactly do they want? They normally use generic letters from which often lacks details. Well, that I would totally agree, Lloyd. Most frustrating, isn't it?
And depending which software you use, I personally like the payroll analysis report, whether it's Sage Pastel Desktop or Sage Cloud Accounting. Payroll, I like the payroll analysis report because that is the one I use in any case to reconcile every month or every 6 months. And up to now, SARS has never requested additional information after I upload the payroll analysis report. And there's also a schedule that we use within BAN, which reconciles the payroll to the cost of employment in the income statement. That's also, I can't see them having any questions about that one because that explains all your differences, if any. So I would say those two are my go-to reports.
Okay, so basically the payroll analysis would be the important one to upload, I would imagine. And hopefully you've checked that it agrees to the M501 when you do so. Okay, Lloyd, I hope we've answered your question there. You're most welcome to ask another question if you feel that hasn't satisfied the answer you're looking for. Right, let's have a look at our next questions. How far back can SARS audit you? That's from Monet. Paula, I'm sure you have much experience in this.
I always say 5 years with the, in other words, if you've been assessed for 2021, then it's 5 years from 2021 going back. But I have seen SARS requesting information going further back than 5 years. So Monique, over to you.
Okay, so legally it's 5 years, Monet, but that is from the date of your last submission of your M501. So if your M501 has not been submitted in the last 10 years, they can go back 10 years. Or if they find any outstanding M501s or M201s, they can go back as far as they find that particular return outstanding. If all the returns are completely up to date, there's no returns outstanding, the law says 5 years. I hope that answers your question. How would you substantiate that you did work in your home office? That's such a good question because Paula and I were discussing it just the other day, in fact. So Paula, let's turn this over to you as you've had personal experience in this. What does SARS ask for? How do you substantiate it?
The addendum from your employer just stipulates that you will be required to work from home for whatever reason. And it might even mention 3 days out of every 5 days. So that will pass the 50% test. But then SARS asks you for photos of your home office. And then they ask for further proof. And in my opinion, they're going to make it as difficult as possible. And I can't see how you can provide proof that you did physically work from your home office. Plus, if you're working from home, you don't want to jeopardize your capital gains threshold if one day you sell your property. So, and what you're going to claim is so little, probably in any case, probably it will just be electricity and based on a percentage. So I would still say rather get those amounts reimbursed. But if anyone has successfully been able to get that home office allowance tax refunded to them, I would love to know how they did it, because in my experience, they are going to reject it somehow. But you
Yes, that was a good question, Bruce, but you're just going to have to try your best and obviously provide as much as you can in the way of proof that you are in fact working at your home office over the 50% and that the room that you are using is exclusively used for a home office. If they see a photograph with a bed inside that room, or they see a photograph of your dining room table, I'm afraid you're not going to get that deduction at all. So just be cognizant of that as well. Bruce actually has another question there. I have another question related to excessive liability cases raised by SARS. I'm not quite sure what he means by excessive liability cases. The previous bookkeeper of a company manually calculated the COVID-19 reduction allowance and incorrectly reduced M201 submissions in the prior year. Year to date, the corrected amounts have been made up. Obviously, the M501 certificates now do not agree to the M201 submitted. What is the correct way to resolve this? Is it best to go back and correct the M201s that were incorrectly submitted? But then how do you enter a negative amount for a particular month on an M201? Well, that's quite a long question, I think there, Bruce. I don't know if there's a quick answer for that. Maybe there is, Paula, if you want to take it. If not, I think the best thing is to consult us with regard to that. So let me hand you over to Paula and just see if there's any quick answer.
It is complicated because I find once I submit the MP501, if one of my MP201s was incorrect, I find the MP501 actually does override the MP201. And then SARS requests supporting documents, and then I upload the payroll analysis and my explanation, a letter explaining what went wrong. And that normally makes the problem go away. So, but it depends how far, was that EMP501 even selected for verification? So I would need more information.
Okay. Thanks, Paula. Oh, here's a happy story from Kashika. I got a home office claim refunded for a client of mine.
Hey.
Please tell us how. Please share your secret. Thanks for that information. Okay, then we have a question from Susan. If the company provides lunches as a benefit, a caterer prepares lunches daily and staff are out of office on service jobs and buy lunches, is the 139 maximum applicable so that employees only need to be taxed on the amount of the lunch expenses claim exceeding 139, if not overnight? Okay, Paula, would you like to tackle this one? This is the fringe benefit question.
Sorry, Monique, I'm actually not too sure about the 139 rands.
Okay, to be very honest with you, I have not seen the 139 rands personally myself.
I'm not too sure how
that could very well, yes, I'm not quite sure how that applies. Look, I mean, first of all, there's no fringe benefit if you provide lunch or meals after hours if staff are working overtime. So that's not regarded as a fringe benefit. That's specifically excluded. But here you've got the company's providing lunches as a benefit, and caterer prepares those lunches daily, and staff are out of office on service jobs and they buy their lunches. Is the 139 Rand maximum applicable so that employees only need to be taxed on the amount of the lunch expense claim exceeding 139 Rand if they're not working overnight? Okay, so I think maybe we're going to have to do a rain check on that one, Susan, because quite frankly, Paula and I haven't actually heard of that 139 Rand being a limit. So I'm sorry about that. We'll have to go to our tax books and see and have a look on that. Have a look up on that and see what the law says currently.
Because what's confusing me, it says if no overnight, because the subsistence allowance, I don't think it's changed in the last few years. It's only if you stay overnight somewhere.
Yes.
So this is not overnight. So that's the part that's confusing me.
Lindy's hand went up, and I see her mic is actually unmuted already. Lindy, why don't you just jump in at this point,
Thank
please?
you.
Yeah, I think the question's a little bit confused between the French benefit allowance, meals provided to staff, as opposed to the travel allowance, which is meals and incidental travel when you travel away from work for more than a night. So they're not the same thing. If you travel away from work, you would give the SARS daily subsistence allowance for the meals and incidental costs. That allowance is tax-free, provided it doesn't exceed the SARS rate that's provided. And then the meals provided at a canteen for staff members consumed on the premises of staff member is a French benefit, but it's non-taxable. It's exempt.
Awesome, Lindy. Thank you.
Cool.
I think you explained it very well, that there's a confusion between the actual subsistence allowance and the staff meals. So
Yes.
That's great. Lindy Jonker, she is one of the band franchisees. She is situated in N1 City, Goodwood, in the area practice in Goodwood. Thank you very much, Lindy.
Sure,
Thank
no
you.
problem. Okay.
Awesome. I hope that's answered your question, Susan. Lovely. Okay, so another question from, well, this is the first question actually from Kashika. If you are renting, can you claim the home office claim from SARS? Paula.
Well, at least then you don't have to worry about the primary residence exclusion. So I would say then you can, whether they will allow it. You can always claim it, whether SARS will allow it, will always depend on the documents that you upload as proof. But yes, at least then you don't have to worry about the primary exclusion for capital gains.
Yes, absolutely. So Kashika, quite right, yes, you can certainly claim whether you rent or whether you own the home. But when you own the home, as Paula had mentioned in her presentation, you have a problem when you sell that house one day, whether it's in 5 years, 10 years, or 20 years' time, because your capital gains exclusion of a primary residence of 2 million will be affected. And you're going to have to prove that you have not changed the use of your primary residence from a primary residence to a business premises. So that's where the law comes in, but makes it a little bit more complex for owners of homes. Right, I hope that's answered your question. Let's just see the next one. Somehow that's disappeared. Okay, Jane, she's asked a question, Paula. She has another question related to excessive liability cases raised by SARS. Oh, wait a moment, we've already tackled that one. I don't know how this is not coming up in order. Let's go to the next one. And that is from Jana. Is the French benefit for the laptop applicable even if it is the company's? Okay, so I presume that the company owns this laptop and the employee is making use of this laptop for business purposes. Paula, would you like to take that question?
I would say no, because I would imagine that you're using it for more than 50% for business use. So if you're taking that laptop home occasionally or even every day, but I mean, out of every, your personal usage would probably be maybe 20, 30%, I would imagine. So I would say it's not taxable.
Yeah, I would agree with that. Absolutely. Okay, a question from Susan. Is it a new change other than our 452 Rand for overnights? I'm presuming we are talking about a subsistence allowance, Susan, but I'm not quite sure what you mean. Is it a new change other than the 452 Rand for overnight? Susan, I don't know if you can pop on to your mic and unmute yourself and just maybe give us more information as to what you are actually inquiring about here. Good morning, Susan.
Hi. Okay, I'm going to try to explain. Like I said, that second one was more a comment of where it comes from rather than another question. But like I said, we provide the lunches, and then when the people are out of office, they are then claiming the lunches that they buy. And I'm reading from one of the tax guides that our auditors issues, and it says from 1 March 2021, if the employee is allowed on instruction of the employer to incur expenditure on meals, and as such employee is by reason of the duties of his office or employment obliged to spend part of a day away from his usual place of employment. The amount reimbursed does not form part of the taxable income unless it exceeds 139 Rand per day. So this looks to me like other than the normal overnight subsistence, there's also now allowance for 139 Rand per day if by reason of employment he needs to be away from the office and then buys lunch. I don't know if that makes sense.
Yeah, there is a change coming up for the current tax year, but I'm not sure if it's just in draft or if it's actually been promulgated yet. There is going to be a change, that what you've said just now, Susan, that even if it's not overnight and you're just out for the day or portion of the day, but I haven't seen it. I'm not 100% that it's effective. I know it's a proposal, but I'm not 100% that it is effective where that is it's a definite. You can actually claim that meal allowance. I'm not 100%. I would actually have to do a bit of research and come back to you on that one.
Okay. Because both our, like I say, in the tax guide issued by our auditor, as well as our payroll outsourcing company gave through the same change. So I just wanted to be sure about that.
All right. And do you still add it to your payslip?
Yes. So what we do at the moment is, at the moment that the claim exceeds 139 Rand per day, that portion exceeding the 139 we do put on the payroll. But obviously we want to be sure that we are doing it the right way, not missing out something.
Under which category do you put it under fringe benefit?
I think possibly it looks like it's under the payment of debt, maybe under the payment of debt. I can't remember. Payment of an employee debt. I'm not 100% sure which RP5 code is used for that.
That doesn't sound quite right. I would actually have to check and come back to you. If you don't mind emailing me or Ben.
Okay, I'll do so. Thank you very much.
Thanks, Susan. And we'll get back to you on that one. Thank you very much for your question. Right, now we've got a question from Elmarie. She has a company that has over 120 employees. SARS shows us as non-compliant to claim ETI for a 2008 M501 outstanding. I phoned SARS and the one lady confirmed they did receive this, but then on a second call, another lady denied receiving this. What do I do about this? The IRP5s were different at that time. Sure, that's going back 2008. So that is what? 13 years ago. That's from Elmarie. Elmarie, I don't know if we're going to have a quick answer for you here, but I don't know, Paula, if you've experienced anything like this.
No, I just would like to know if you are able to get a tax clearance certificate.
Okay, so I don't know, Elmarie, if you've ever tried to obtain a tax clearance certificate, because if you do get one, that means that all your returns are in fact up to date. So it would be interesting to see if there is a case where you can't get that. But I don't think there's any quick answer that we can give you how else you can tackle it right now. But all I can encourage you to do is persevere.
Yeah.
The SARS.
And if you can't get the tax clearance certificate, just challenge it and then upload the letter if you can with your query.
Okay, great. Okay, next question, okay, from Shika. Shouldn't the taxable portion of the subsistence allowance be reflected under other allowances and payment of debt? The taxable portion of the subsistence allowance be reflected under other allowances and payment of debt.
Monique, maybe I can just jump in here.
Yes, please, Lindy, do so.
The allowance, the allowance should be reflected on the code on the income side of the payslip as an allowance, and then the employee will claim back on that allowance when they submit their tax return.
Yes, quite right. The
Yeah.
subsistence allowance. Yes.
I'm not sure where the portion of the payment of debt comes in, unless that what they're saying is the meals are, say, worth 200 Rand. The employee is only paying 139 Rand, so they're deducting that like an advance. So they're applying the fringe benefit meals at 200 Rand and the daily subsistence allowance at the 139, and that would be then under the tax-free allowances, and then under the deduction code they're deducting the amount that the employee is contributing toward the meals, possibly. I'm not sure. On the lady who has the problem with can't claiming the ETI, that is best to take an affidavit to SARS, go to SARS with your previous tax clearance that you got, with your SARS records if you have anything, and an affidavit from the police station to state that everything was done at the time and what the firm was that did it, and actually go and speak to a consultant, because disputing that online, I don't think you would be successful.
Okay, that's fantastic, Lindy.
I've had it once before with a client where they went like 10 years back. It took a year to get it resolved, but eventually it was resolved. Eventually
awesome,
they believed us, yeah.
That's fantastic. I mean, that's a lot of frustration. That's a lot of frustration, a whole year to get it resolved. But of course, you know, it's important to persevere and get it resolved. So that's what's great about the band franchise, is that all of our franchisees work together. As you hear, Lindy pops online and is able to assist. So we have a huge amount of resources and experiences when it comes to trying to resolve some of these issues. So great stuff, Lindy. Thank you so very much appreciated.
No problem.
And I'm sure that, I think it was Marie that asked that question. Marie, I do hope that you're still online and that's been of value to you. Jolene's asked the question. An employee has the use of a motor vehicle and it is used 80% or more for business and sometimes private. If the vehicle is used for private use, the employee pays the costs of the fuel. Do you still tax the employee on the other 20%? Right, Paula, should I hand that over to you?
I would still say yes. But then use that when they get assessed at year end, use that whatever they paid privately to reduce the tax at year end when they get assessed. Alternatively, rather don't ask them to pay for private use, because it's just going to make it complicated. I don't know. Or because it's based on a formula, I can't see how it can fluctuate up and down. That could also make you you know, it might make your return triggered or something for tax. So I would rather keep the allowance consistent and yes, tax the employee on the 20%, and then they will get the benefit and the refund when they get assessed at year end. Monique, any other thoughts?
Yeah, no, I completely agree with you there. It's quite clear that the employee would be taxed on the 20% if 80% of the vehicle is being used. But importantly, that employee has to keep a logbook. And that logbook, they have to justify their business travel as opposed to their personal travel on their tax return, on their personal IT-12. And that amount taxed on the 20% will be adjusted according to their the actual business travel. So the employer obviously will still tax the 20% without a doubt. Hope that answers your question, Jolene. Even though the employee pays the fuel, yes, they would have to justify the deduction in the personal tax return. Okay, great. The next question is from, it's not a question really, it's, I see Sharon has left, that they made the change of meals came into effect on the 1st of March 2021 and is an allowance in terms of Section 8, non-taxable reimbursement. Okay, so I would think that that's probably, I don't know if it's Section 8 of the 4th schedule she's referring to, or what Section 8, or if it's actually the straightforward the income tax section. We'll have to have a look at that. That's great. Thank you very much, Sharon, for that input. Belinda, one of our franchisees, has also substantiated that and said the 139 Rand is the incidental subsistence allowance. Lindy, okay, thank you very much. She has clarified the confusion between the fringe benefit and the meal allowance, and she has come online and she's clarified that.
As an employer, am I obligated to declare interest-free soft loans to employees? I'm not quite sure what the soft loan means. I imagine it's a casual loan. If it's repaid by, if it's the 3,000 Rand casual loan and it's repaid by year end, then no. But if it's outstanding at year end, when you submit your financial statements, and it's still outstanding at year end, I would say yes, because it is still outstanding. And it's interest free. So I would imagine it is under 3,000 Rand. If it's over 3,000 Rand, it can't be interest free. So I don't know if that answers your question.
Yes, I think, Lloyd, you know, as an employer, yes, when you ask the question, am I obligated to declare interest-free loans to employees? I would imagine that, I'm not quite sure where you would think you would declare it, but you would certainly, if you've opted not to charge your employee interest and that loan is over 3,000 Rand, then yes, you have to declare it on your payroll, the interest portion at the official rate. So you need to calculate that on a monthly basis and include it as a fringe benefit onto that particular employee's payroll and tax it. So that is where you would declare an interest-free loan if it's over 3,000 Rand. If it's under 3,000 Rand, then that loan won't reflect as a fringe benefit. The interest-free portion is only applicable if it exceeds 3,000. So then you would not need to put it onto the payroll. Obviously, there would be no fringe benefit to declare, so to speak, if that's your question, right? If you go to the BAN site, which is www.ban.co.za, you will a pop-up will come up. Sign up for our monthly BAN webinars. First of all, so if you would like to join us next year for our business sessions, our business information sessions, please add your name there. For our recordings of all our webinars, all you need to do is go to our events page, and you'll see we've got free webinars, complimentary business webinars. Just click on that and all our recordings will pop up here. So this one today will be recorded here. Register for our webinar. When the recording is available, it will say recording available here. You click here and you can see our recording. So all our recordings, in fact, are listed here over the many years that we've been preparing these webinars. So great, Lloyd, and anybody else that would like to see any of our previous webinars, not just this one, please pop onto our website, www.ban.co.za, and go to the news events section.
And Susan, thank you for sending it through. I thought it might be something that we just wanted to share before everybody runs.
It's an interesting observation. This is not a question, she says, just a comment, something she picked up that may be checked. She stands to be corrected, is that you may not charge interest even to employees unless registered as a financial service provider. That's in conflict between SARS and the National Credit Regulator rules. Well done. I must say that's a very interesting observation, Susan. Look, the interest being charged to employees is very much in the Income Tax Act under the 4th schedule. Sorry, the 7th schedule. 7th schedule being the fringe benefits section. So it's very clear that SARS wants you as an employer to charge interest at their official rate on any loans that exceed 3,000 Rand. And if you do not, it becomes a fringe benefit. That value would become a fringe benefit and added to remuneration and tax. And if that is in conflict with the national credit regulation rules, I am not familiar with the national credit regulation rules at all, so unfortunately I can't comment on that, but maybe somebody else can. And I'll certainly talk to BAN's legal advisors about that, because obviously they deal with the national credit regulatory rules on an ongoing basis. And we'll check with our BAN legal side on that, and if there is in fact a conflict. But I can say this, is that whatever it may say in the national credit regulator rules, the SARS Act will still apply without a doubt. I don't think that any employer should go into a court and fight and say, I haven't charged my employees fringe benefits on interest-free loans because it's in conflict with the national credit regulator rules. I think the first thing to do is get legal advice and still abide by the SARS laws unless you get legal advice to the contrary. But a great observation. Thanks, Susan. First of all, I'd like to thank you, Paula, for incredible work in presenting the slides and the presentation today. It is her first webinar that she has presented for business owners, and she's done a sterling job. Thank you so much, Paula. And of course, my absolute thanks, Paula, and my very warm thanks to Shane, who hosts our webinars over the last few years. Working with you, Shane, has been absolutely amazing. I look so very forward to working with you again next year on these business webinars. And also, I look very forward to all our audience joining us and that audience growing and growing, because the real purpose of our webinars is to educate business owners so that we can prevent risks before they in fact happen. Yes, do please talk to your accountants, your franchisee, if you need any advice at any stage, and at any time you can email the BAN head office for any questions that you might have. We would love to hear from you, and we would love to see you next year. So all the best over the festive season, everyone. Please take care, and we'll see you next year. Thank you very much. Bye-bye.